There are a lot of movements that kind of go through these growing pains where the early ones are really kind of more hardcore or ideological in a sense. And then as you get to become a very big movement, that gets diluted to some extent. I think there's an inevitability to it. You're not going to have billions of like hardcore cypherpunks in the world, as cool as
Yeah.
that would be. And so I think it's natural that it shifts toward a more financial conversation. I think what remains relevant though is you can still grow the pie. I mean, if Bitcoin, for example, gets 10 or 100 times bigger than it was any given like year in the past, you could say, well, maybe cypherpunks are a smaller percentage now, but you can still grow the absolute number of people that are building on Bitcoin, that are interested in those kind of freedom aspects to it, and that are putting it to that use.
Buckle up because the truth behind the market collapse is wilder than you can imagine. The financial world is undergoing a seismic shift, and the catalyst? Bitcoin. What started as a niche movement among privacy-obsessed cypherpunks has evolved into a global force, shaking the very foundations of traditional finance. Once driven by a small group fighting for financial freedom, Bitcoin's explosive rise has forced banks, institutions, and even governments to take notice. Lyn Alden reveals the shocking reality behind this transformation. While Bitcoin's original cypherpunk ethos has faded, its rapid expansion into the financial mainstream is directly tied to the current market collapse. This shift was inevitable. Bitcoin was always going to grow, even if it meant compromising some of its founding ideals. The crash we're seeing now is the result of Bitcoin's unchecked adoption, where speculation and institutional involvement have reshaped its trajectory in ways early adopters never anticipated. But here's the most jaw-dropping part: Bitcoin's revolution is far from over. It continues to infiltrate new industries, bringing its disruptive influence with it. The global economy is on the brink of an unprecedented transformation, and the full impact of this shift is only just beginning. What happens next will leave you speechless.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
This is pretty much what price focused Bitcoiners would hope for is that Bitcoin is kind of separated from the others, that they're at least going to ring fence the coins they already have. That was at least my kind of lower end base case is not trying to expect bigger things, and I'd rather be surprised to the upside than the downside. So we at least got, it seems like, the minimal start, and then we'll see. I think the biggest, there's a couple reasons I think why price action is not very great at the moment. I think one is that the market already kind of anticipated this. It's not really like a massive upside compared to what they expected. And to the extent that it could be, because of the open ended nature of trying to find ways to buy more Bitcoin in a budget neutral way, it's very unclear on the timeline or the scale that will end up occurring. And so the market still has questions, and whenever you have questions, you have price uncertainty. And then in addition, I mean, when we saw like Bitcoin consolidate for 7 months last year, right? So March 2024, it broke out, touched new highs, and there were some kind of like on-chain indicators you can look at that kind of give you a little bit of a measure of maybe euphoria or just kind of the sheer speed of the move. And so, for example, I like to look at market cap to realized cap. Basically, the ratio of market capitalization to like average on-chain cost basis. And when that becomes pretty elevated, sometimes the market needs to digest that because that's, in some ways, it's like a temporary price. It's like if one house on a block sells and all the houses get repriced, it's like, well, is that really the new liquid price at the street, or maybe does it need more time to actually get there? So I think that Bitcoin had this like 7 month consolidation. It wasn't nothing was as euphoric as we see in multi-year tops historically that Bitcoin's had, but it was a little frothy. We worked that out, and I think we saw kind of similar ratios back in November 2024 after the election when it broke out to the kind of the first time it was touching 100K. We had similar kind of a consolidation since then at around a similar kind of market value to realized value ratio. So it's not that surprising to see that the market needs time. There was a lot of euphoria around MicroStrategy at the time as well. I mean, it was trading at like over 3 times NAV, if I remember correctly. And these things just kind of take a time to digest. So I think that's kind of where we are with the market. The way that I generally talk about it is Bitcoin has plenty of its own characteristics to be bullish on, and any kind of large individual nation state buying is kind of a boost, a cherry on top. And it's always better to kind of have just low expectations, so that you're more likely to be surprised to the upside than the downside. And I think that it kind of the main thing now is just uncertainty, right? Timing, the scale that they'll do it. During, right now when they're kind of focusing on these Doge cuts, they are trying to, for example, consolidate properties to some extent to say, hey, we have half-empty buildings. Can we save taxpayer money by, kind of ending these building contracts or selling these properties and consolidating? And then, of course, one can debate, should that go back to the taxpayers or should that go to Bitcoin? And that kind of opens up a whole discussion. And so far at the moment, I think one of the key things that has already been touched on here is that it's just really good advertising. That basically that the United States government, the president, other people high up in the administration are talking about the benefits of Bitcoin and how it's different than crypto. And I think that's very positive. And I think if you're a nation state out there and you're not already kind of front running this a little bit, it's like, what are you even doing? Like, there's like 200 countries out there. It's like, why is there like three that are kind of like publicly known to have some, whatever the number is? And it's like they're basically just telling you right there that it's now endorsed by the one of the two biggest countries in the world. And so I think that's kind of how I look at it. I'd like to see actually more things from the government. Like, everyone's kind of focused on the strategic Bitcoin reserve because it is the most impactful for price compared to other things that the government could do. But I like to give a shout out to other things they could do. They could, for example, make the first $5,000 in like capital gains on Bitcoin per year tax free, which alleviates like accounting issues for people that want to spend it on small amounts without really affecting the way that they get revenue from maybe large traders and things like that. So I think there are kind of like low key things that are quality of life things they could be doing that are good for the asset. Whereas obviously this one gets a lot of headlines because price. When is it going to moon? And so of course that's that's kind of what always captures attention. I'm not a legal expert, but my understanding is that it would require Congress to do kind of exclude or partially exclude an asset. But they can still lobby for it. I mean, they can push for it. They have, their party is in control, and obviously
Right.
Trump has a lot of influence on the party, and that that probably wouldn't be a core controversial thing, other than the fact that it's not really on most Congress people's like radar. That's not something they really wake up and decide to care about, but it's something that doesn't really hurt anyone. It's got really low impact financially either way. But then there are people that would really benefit from something like that.
According to Lyn Alden, Bitcoin is on the verge of flipping the financial world upside down, and this is just the beginning. While the market may seem quiet amid ongoing economic uncertainty, don't be fooled. The calm before the storm is intense. Bitcoin's price has been consolidating, but beneath the surface, major policy shifts are quietly setting the stage for something massive. The market is waiting for that tipping point, and when it comes, the impact will be explosive. Governments aren't sitting on the sidelines either. They're actively exploring ways to enhance Bitcoin's usability, and tax incentives for smaller transactions could be the key to unlocking mass adoption. As traditional financial systems struggle to keep pace, digital currencies like Bitcoin are gaining momentum, and policymakers know they can't afford to ignore it. But here's where things get even more interesting. Bitcoin's rise is fueling geopolitical tension, particularly as BRICS nations push for non-censorable transaction methods. This is turning into a high-stakes battle between innovation and the volatile nature of digital asset. Let's dive deeper with more clips from the interview.
I would actually add to that point real quick is that when we see in the BRICS nations, they have been for a while exploring all of these like other potential like transaction methods, cross-border payments and settlements that are not censorable by any one country, and they've had a lot of frictions with that. It kind of shows the challenge of trying to agree on like this closed source consortium type of thing. So the BIS was like Enbridge, I think it's called, and there's a number of central banks that were participating in that, and there's like BRICS Bank, and basically these various ways to try to make that work outside of the dollar system. And they have this open source, freely accessible thing that's already working. And one of the friction points, I think, for a lot of them is, I mean, one is just maybe lack of understanding or like not having done the time on it, and two is like even if someone gets it, there's always career risk. You add Bitcoin to your reserves, and then it goes through a period of downward volatility. And one of the challenges is that they kind of have to have Bitcoin to make use of that, because if they only want to say buy Bitcoin to use its transactional properties after they've been censored, that gets harder, especially if there's like a big amount of censoring happen. So they have to kind of pre-own it if they're going to get the core benefits, but then they go along for that volatility ride. So then they have to position it accordingly so that they don't get like public backlash or career risk and things like that. But I just find that we kind of have it staring us in the face, a problem that dozens of countries are like literally saying we want to have this thing, we want to have X dollar settlement mechanisms, and yet strategically there is this asset that does exactly that. So generally speaking, a weaker dollar is good for global liquidity and therefore asset prices. Other levers are just basically to tone down some of the things that they like the tariff, for example, to say, okay, we have more clarity here. We're happy with our tariff approach. This is what we're going to do. And maybe we'll ratchet up over time or something like that. Basically, a little bit less kind of headline risk that investors keep running into where, they think certain things playing out. And then it's like, oh, these tariffs are back on the table and they're off again. They're on again. They could decide to reduce the impact there. They also can focus on tax changes. Generally speaking, there are ways to stimulate not just through spending, but by in some sense reducing revenue. That's like another lever that they can choose to pull. The prior administration, they passed a pretty big tax cut, and it resulted, for example, in capital repatriation. So companies around the world had kind of global capital, and then they pulled it back to the U.S. And then a lot of times they used it to buy back shares, which was good for the stock market. Now they don't really have that same kind of pool of cash, but overall, any of those things that are kind of pro bottom line and less disruptive, they could decide to pivot to more of those once they get past this kind of earlier pain point. Another challenge that they face is that Trump in this administration is entering with higher equity valuations than the prior time. Not just in terms of like what the S&P 500 is, but like say price to earnings multiples and other metrics like that. So they're starting with a position that's it's kind of takes more effort to kind of keep it elevated or keep climbing. And so this might be a way of kind of setting expectations to say, maybe don't expect, the first year to be anything like the prior year because it's already somewhat frothy. I keep using Costco as an example where they were trading at like 60 times earnings for like a 45-year-old blue chip company or however old they are, and it's like, and you see that a lot in the market. That just there's pockets of froth out there. It's not just the big seven tech names. It's other kind of growth oriented, high quality, large cap equities in general, a little bit frothy. So, and I think they see that. There are a lot of movements that kind of go through these growing pains where the early ones are really kind of more hardcore or ideological in a sense. And then as you get to become a very big movement, that gets diluted to some extent. I think there's an inevitability to it. You're not going to have billions of like hardcore cypherpunks in the world, as cool as
Yeah.
that would be. And so I think it's natural that it shifts toward a more financial conversation. I think what remains relevant though is you can still grow the pie. If Bitcoin, for example, gets 10 or 100 times bigger than it was any given like year in the past, you could say, well, maybe cypherpunks are a smaller percentage now, but you can still grow the absolute number of people that are building on Bitcoin, that are interested in those kind of freedom aspects to it, and that are putting it to that use. Part of the reason I'm active in venture in Bitcoin is to keep supporting people that want to do interesting things with Bitcoin aside from just hold it. That want to build out better payment rails and use it as a truth server. The immutability aspect to say this thing was indeed stamped into it at this time and we can prove it. That kind of stuff. And I think that's still relevant. And I think there are a lot of really good people still working on that. One of the narratives that some bears like to use, some people in the Bitcoin community kind of point this out, but there are also people external to it to say Bitcoin is quote unquote captured now because
Yeah.
everybody's focused on number go up and nation states, and I think that's kind of missing.
As nations seek alternative transaction methods resistant to single country censorship, they face significant technological and geopolitical challenges. These efforts parallel the surge in Bitcoin's value and the increasing interest from governments, including the US, in establishing strategic Bitcoin reserve. The Trump administration's push to accumulate as much Bitcoin as possible signals a major shift in monetary policy, aiming to strengthen national economic resilience through a non-traditional asset. This strategy is designed to integrate Bitcoin into the financial system without burdening taxpayers, demonstrating a careful approach to adopting new financial technologies within traditional economic frameworks. Lyn Alden highlights the delicate balance governments must maintain, embracing digital assets while managing their inherent volatility. As Bitcoin becomes a crucial part of financial discussions, its role in global monetary policy continues to evolve. The U.S.'s strategic Bitcoin accumulation, alongside other nations' efforts to decentralize financial power away from fiat systems, marks a shift toward a more diversified and potentially democratic global economy. These developments reinforce the growing importance of cryptocurrencies, not just as investments but as fundamental components of the future financial landscape. As we wrap up, do you think tax incentives for Bitcoin transactions could accelerate its adoption? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.